Good afternoon, everybody, and welcome to the Shipping Professional Network's event number 94, Shipping and Sustainability Financing. Thank you very much for joining us this afternoon. I'd like to introduce our panel moderator, Vivek. I'll hand over to you.
Thanks very much, Isabel. Welcome, everyone. Thanks for joining us here today to discuss what we think will be a very exciting and transformational development for the shipping industry. The advent of sustainability financing. We're joined today by two companies that have been very early movers on this front, Seaspan Corp and Odfjell. And we're also joined by Watson Farley's expert in all things ship finance, Lindsay Keeble. So without further ado, I'll let the panelists introduce themselves. Lindsay, could you give us a brief introduction?
Hi everyone. Yes, hi Vivek, thanks. As Vivek mentioned, I'm Lindsay Keeble and I'm co-head of Watson Farley's Maritime sector.
Matthew?
Hello everyone, I'm Matthew Tenari. I'm the Global Head of Corporate Development at Atlas, which covers Seaspan Corp and APR Energy. And I'm responsible for all the investing activities and all the financings.
Tremendous. Terje?
My name is Terje Iversen. I'm the CFO of Odfjell SE. I've been with the company for close to 10 years. Besides from that, I have my background from the drilling rig business and also from the maritime industry.
Fantastic. So my plan is to ask questions at the panel, give them issues to debate for the first 40 minutes. We've got just under an hour, so hopefully that will leave just under 20 minutes for Q&A. If anyone watching in the audience has any questions, please put them in the Q&A. Please can we ask that you identify yourselves and state your affiliation, and then I'll hopefully be able to put them to the panelists at the end of my questions. So can we start with you, Lindsay? Can you give us a brief overview of the world of green financing? How much of it is open to shipping and where do sustainability linked bonds fit into it?
Sure. I suppose there's so many stats flying around about this. There's so many numbers that people quote, and also it's a very broad world. I think people talk about green issuances or green bonds and it means different things to different people, but I suppose the Climate Bond Initiative figures are probably a good guideline, and they said that last year alone just under 270 billions worth of green issuances were made available. So that's a market of $1 trillion since 2014. So if you take that, the sort of that world, it's a huge amount of money out there available to companies for sustainable or green matters. But I think those figures maybe they're very large. Maybe it's a bit misleading because some of this may be sovereign issuances. It's not the type of thing that we're all looking at today. You know, that will cover sovereign bonds, ABSs, green bonds, green loans. And I think, as people always say, well, what is a green bond? What are the criteria? What do we need to have to get this? And I think those criteria are not, it's not set out in stone. It's not in any regulation. So I think that it is a very vast world, and I think that doesn't include when banks are making what they call green loans or loans with margins linked to sustainability criteria. So I think that there is a huge world out there. And how much of it's available to shipping? Well, I don't think there's any cap on that, Vivek. You know, the CBI figures from last year, they said 24% of that was available or made available to the transportation industry. Some of this will be rail networks, metro networks, etc. But it's clear that it is an option for shipping. I think it's clear, as evidenced by what Seaspan and Odfjell have done, there is definitely much appetite out there. The issuances that we've seen and the loans that we've seen that have green criteria linked to them, they're filled very quickly. So I think there's definitely investor appetite out there for this. I think that where does sustainability linked bonds fit in? I think that's definitely an area where we see that there's more scope for the shipping industry. I think in the past, the label of green bonds people have queried that and whether that can really apply to shipping, which some see as maybe not a green industry as such. And I think that the label around sustainability or transition bonds, however people call them, or transition funding, it fits so much more more neatly into what we do in the maritime industry, because we're moving from where we are today to where the shipping industry needs to be. So I think that sustainability linked bonds allows that, it enables that. They look more holistically at the whole ESG story of the company. So it's not just looking at a specific use of proceeds, it's looking at E, the S and the G and the governance, and it's looking at, and I suppose I see it as doing something which shifts the needle. You're moving from where you are today to where you want to be in the future. So I think that the KPIs around shipping mean that sustainability linked bonds, I think, fit more neatly. And I think that the term that they use is this sort of beyond business as usual, and I'm sure this is what Matthew and Terje will come on to explain, that that's what their sort of bond issuance is. So I think there's a huge market out there, and I think it's not so much what's available to shipping, but what will be available to shipping companies in the future if they aren't embracing the ESG movement, because it's clear the legislation is here to stay. It's only going in one direction from where we're sitting.
Right.
Lindsay, do you have a whole slew of clients that are kind of teeing up to explore these bonds?
Yeah, they're looking at bonds and also just financing general that is linked to sustainability, margins, interest rates, etc. That they're looking at showing and evidencing criteria that they have this. It's definitely the more topical question that we're being asked for new financing. Especially, I think, as we'll come on to later, that some of the what needs to be done in the industry, the traditional financiers are maybe just not set up to fund some of the new innovation. And I think these products allow general corporate purposes rather than the specific asset financing. Mm-hmm. So it's definitely we're getting a lot more interest.
And on that, Matthew, we should mention that obviously Odfjell issued their bond at the end of January, and you did yours at the beginning of February. But just yesterday, we got the news that Hapag-Lloyd is going to do one, and today Hafnia Tankers are in the news saying that they're going to do a sustainability linked financing as well. So the momentum's definitely growing, and you two got the ball rolling. So for those in the audience who probably may be new to this topic, can you describe what your bonds look like? How are they different from your normal bonds? Start with Terje.
That's fine. Thank you. Just a short background also maybe for those who are not that familiar with Odfjell. As a company, we are a company that are world leading within the chemical tanker business. We're also a terminal operator and owner. We have a global platform today with around 91 sophisticated chemical tankers, mostly stainless steel vessels, or so-called super segregators, that in reality can carry anything liquid, though we have a particular presence in the specialty chemicals market, where we find the most difficult and hazardous products to carry within the shipping business. And we also have 5 tank terminals in key petrochemical hubs globally, also for storing and handling of the same chemicals. Odfjell as a company is around 106 years old, so focus on a kind of long-term perspective on the way we do business and how we develop. That is maybe more or less rooted in our DNA. Sustainability is not kind of new to us, so that is embedded in the business we are running and how we are thinking as a company, being long-term, and of course then you need to act in a sustainable way. We are listed on the Oslo Stock Exchange, and we have 3 bonds issued in the Nordic high yield markets. We did a refinancing early this year. We had a bond that matured, and we started actually more than 1 year ago to plan for a refinancing of that bond. We ended up issuing a bond of around 850 million Norwegian kroner, approximately $100 million. It's unsecured. It's issued under our sustainability-linked finance framework that we established then in November last year. The bond was issued at par. Coupon is around 5.75 above NIBOR, and the tenure of the loan is 4 years. And the sustainability link comes in at the redemption price. We have committed to ARR trajectory, reducing our carbon emissions for our fleets by 50% in 2030 compared to baseline in 2008. So we are kind of committed to deliver according to that plan under the sustainability linked framework. We also consider other ESG targets related to the SNG, but found after discussions with a kind of investor on the market that kind of environment target is really something that the investors is concerned about and is appreciating that is a kind of important KPI in our loan. And also saying that our ambition to reduce with 50% the carbon emission is quite ambitious and is also measurable target. And behind that is a kind of comprehensive and detailed fleet transition plan demonstrating how we actually will achieve our target, because you need to kind of work quite intensively and have a clear plan how we can do that based on the fleet you have and how you can develop that. But the plan has then been reviewed by external third parties that has reviewed the plan and consider it as achievable. And also a kind of ambitious plan. And the way it works is that since the loan matures in 4 years' time ahead of us, we need to kind of reach a 31% reduction for our own fleet by June 2024 to avoid an increased redemption price for the bond. So far, we have already achieved a 26% reduction compared with baseline. And that is a result of investing heavily in our fleet and typically energy saving devices and how we operate the vessels, from hull cleaning, from weather routing, etc., but also a lot of investment being done into the fleet. And to reduce the target of 31% in 2024 to kind of avoid a penalty, that means that we have to do more than actually 100 investments in energy saving devices for our existing fleet to be able to achieve that target. So that is the overall frame and kind of the thought behind the sustainability linked bond that we have issued.
Okay, all right. Interesting that pressure from investors was very much on the E rather than the energy. We might come on to talk about that later. But just to summarize, you have a target of a 31% reduction by 2030. And of that 31% reduction, you're 24% of the way there already.
It's not exactly that. It's 50% by 2030. And by 2024, when we are getting close to the maturity of the loan, we need to be at 31 towards the 50% in 2030.
Okay, all right, understood. Matthew?
Sure. So for some background, Seaspan Corp is the issuer of the NOC bond that had the sustainability link. Seaspan is the world's largest container ship lessor. So once our new building program is fully delivered, we'll have 160 vessels, most of them in the 10 to 15,000 TEU size segments, so very large ships that with large capacity. Given our business model, we lease these vessels out to customers and operate it at their direction. It's a little more challenging on the emissions front to fully control our destiny there. We do control the design and the quality of the ships, which we optimize and have done so over the past kind of decade. But the customer does direct how those vessels are used. So the behavior of the vessels really drives the emissions criteria and to be in line with the different trajectories that the IMO and the Poseidon Principles lay out. So what we did for our bond was base it on a KPI on a metric that we fully control, which is CapEx in alternative fuels. So we set a target over the 3-year life of our bond to invest $200 million in alternative fuel propulsion. We fortunately, after we issued our bond, we had a very fast moving deal with a new customer, and we ended up investing, well over 200 million in LNG powered vessels or dual fuel LNG powered vessels. So we have met that KPI in a very short period of time. And we likely, going forward, will continue to try to set KPIs as we do our normal refinancings and funding of growth we are very interested in continuing it in a sustainability-linked way, whether that's in the bank market or the bond market, and we will aim to try to keep the KPIs within the direct control of the business.
Okay. So just to clarify, because it looks like less than a month and a half into your 3-year bond, you've already met your target. You know, people might look at this and say, well, you've set the target too low, you know, and you know, wasn't that expenditure already in the pipeline? But it wasn't. It was a deal that, or it was a project that came to fruition after the bond had closed.
Yeah. So not to put a little commercial for Seaspan, but one of the reasons why we're very successful is because our customers can, you know, we have very close partnerships with them, and they can rely on us to execute very quickly. So when a new customer came to us with a big need to fund its future growth, we reacted very quickly, and we're happy to fund that with the LNG dual fuel vessels. It, one, was the right thing to do for the customer. Two, was the right thing to do from a future fuel standpoint, and three, it helps satisfy our KPIs in our $200 million sustainability-linked bond, which, you know, relative to the size of the business, the bond is fairly small. But we were very excited when we were able to satisfy that quickly.
Right. So can I ask you both, were you able to roadshow your bonds in any way ahead of the issues?
We did, but we did that through Teams. So we had, I think we had close to 40 investor meetings through 3 or 4 days, but all that was done through to the web or through the Teams meetings that we arranged. And I felt that was really kind of an advantage compared to traveling around and meeting all these investors in the offices around in the Europe or in the Nordic at least. So it was a very efficient way to issue a bond in today's circumstances.
Maybe
yeah,
this is the way to do it.
We had the same experience. We had a kind of a pre-sounding or non-deal set of meetings in Q4. And then when we went to market in Q1 of 2021, we just went straight away to the public offer.
And Terje, when you said that the demand for the investors was very much for environmental metrics rather than metrics on the S and the G, this came out through those 40 meetings with investors?
Actually, it came out before that, because we started actually, we issued in January this year, and I think we started the process 1 year ago. And then we kind of, we had these regular meetings with the investors, and we're talking about kind of the plans and strategy going forward. And we got a clear indication from several of the kind of usual suspects, if I can call it that, investing in our bonds. They indicated more and more kind of precisely that they were kind of more reluctant to invest in shipping than they have been previously, because of the focus on sustainability and on the ESG. So they were kind of concerned whether they could continue to invest in Odfjell. And then we started, okay, how should we approach that? And we kind of started focusing on what has we as a company done on sustainability throughout the many years. As I said, we are more than 100 years old. We have had sustainability on the agenda for a long time. We have done a lot with our fleet for much more fuel efficient fleet than we had some years ago. So when we started talking about the history and what we had done, and kind of we get the feedback that this was interesting, and maybe you could consider to include kind of something about sustainability in the bond, then we could be interested to participate in a new issuance. So actually we had a lot of meetings throughout the last year to kind of test the appetite for issuing a sustainability linked bond, and if so, what kind of targets should we include in that framework? And that, after some discussion back and forth, and also in close dialogue with the advisors that we had involved in that process, we started and we decided to use the environmental kind of targets when it comes to do the fuel efficiency for our fleet, because that is an ambitious target. It's measurable, and it's something that the investors can relate to. When we talked about kind of the S and the G, it was more difficult to get really a good firm grip. What kind of KPIs could you set that really the investors could consider as achievable or kind of ambitious and measurable? So I think that was a kind of cooperation between ourselves, our rangers, and the investors, ending up with a target that is set for the environment.
Right. You mentioned at the beginning a lot of them were your kind of usual suspects in terms of your usual investor base. From reports of both of your issues, it seems that they were more successful than everyone anticipated to begin with. You got better pricing. I think Seaspan was able to increase the size by a third, right? Is that right?
That's right.
Yeah. So I mean, to outside observers, it looks like this is a new crowd that has come to the shipping industry to provide finance, and they've got deep pockets, and it's very exciting. Is that how it looks from where you stand?
Well, from our perspective, this was a first-time issue for us, so we wanted to make sure it was a win-win for the investors, the company. So we didn't push pricing hard, but we did use the incremental demand as an opportunity to upsize the issuance, as you said. What we found was certain investors came in, and it was a kind of a binary whether or not they could look at this deal because of the sustainability angle, and they asked a number of questions on the ESG side, and they evaluated what the company current, past, and future kind of plans for ESG were. And once we cleared that hurdle, then it became the credit conversation. So they're not pure ESG investors, but there was this kind of, it seemed like there was this overlay where if you were not viewed as an ESG forward business, it would be a binary no interest. And then if you clear that first screen, then they could evaluate the credit.
Did you find that as well, Terje?
I think we had very much the same experience. And I think we ended up with kind of the same investor base that we had in previous bond loans. We got a substantial oversubscription, that's correct, and that also kind of, I think, led to a better price for the total bond. And also we saw that 1/3 of the investors that came in was because of the ESG kind of framework. But if we haven't included that, I think we will not have the kind of the oversubscription. We will succeed anyway to issue the bond, I think, but the price may have been at a lower point or a higher point. But I think that we didn't see a lot of new investors coming in, but we would experience that some of the usual investors had not come in if we didn't include a sustainability link. So we had lost kind of a part of the normal investors in our bonds if we hadn't included that.
And is this new crowd a tough crowd? Do they ask tough questions?
They are certainly focused on ESG. They kind of challenge you. They want to really understand your KPIs, and they want to have a clear commitment and a feeling that you're really ambitious and you are able to deliver on the targets you set. So we used a lot of time to kind of explain the history for the company, what we have done and what our plans are going forward, without, of course, disclosing kind of more kind of confidential way we operate and how we think of develop our fleet. But they are really into this, and they have their own ESG experts, and are really kind of challenging you and going into the details to really understand the structure.
Matthew, anything to add?
Sorry, I was going to say, you said that the social and the governance, it's harder to necessarily have the criteria to measure against. But is it fair to say that without showing that, like, sustainability isn't just about the E, is it? It's about your whole corporate outlook. So if you didn't have good social and governance underpinning all of this, you probably wouldn't have got over the first hurdle. So even though it's not measured per se, is it still equally important?
Mm-hmm. Absolutely. We used a lot of time on explaining what we are doing on the SNG and how we are working against anti-corruption, how we are involved with the UN Global Compact, the Carbon Disclosure Project, and all that kind of initiatives that we are involved in and want to continue to be involved in. So we told the full story, but we ended up with kind of one KPI related to the environment. And that's, I think that is easier for the investor to relate to going forward, instead of measuring 3 or 4 KPIs that are maybe softer and more difficult to kind of access.
Yeah,
Matthew, anything to add?
We had a similar experience. We kind of headed off the S and the G questions in the presentation. So put the KPIs that we tracked, Seaspan is going to be issuing its first public, or Atlas rather, ESG report this year. And it's not just going to be some of these environmental metrics. There will be a number of KPIs in our scorecard across the ESG that we track internally. So I think walking the investors through that, to your point, is that screen. And if you show the focus and show the track record and the plan for these other parts of ESG, you can kind of clear that hurdle.
Lindsay, Watson Farley has done a survey recently of operators in the shipping industry and financiers, and you found, I guess, a slight divergence in emphasis, didn't you?
Yeah, so I mean, the biggest divergence actually was on the S and the G. I think sort of while 90% of financiers said that ESG as a whole has sort of some more crucial importance in their investment decisions. On the flip side, 29% of owners said that ESG had no or minimal influence on their investment decisions. Obviously, and I'm sure that you two would not have answered that question in that way. But I think when we dig deeper behind the figures, it was clear that there was much more alignment between financiers on the environmental requirements with the owners. I think the focus of most of the, we had 550 responses to the survey, and about 40% were ship owners. And it was clear that the environmental focus has been at the forefront of everyone's mind. But I think the S and the G, as just been explained here, they're very important if you want to tap this sustainability linked financing that's out there in the market. So I think 69% of lenders said that they are looking at or already do have additional governance criteria. So this is lenders in the broader sense, sort of financiers. And I think this having more extensive governance criteria, whether that's going to the anti-corruption and bribery, sanctions, compliance, maybe deeper KYC, whatever it may be, or looking at board constitution, I think it is going to become more and more a feature. I think 61% of ship owners surveyed said that they're not currently looking to change their governance or corporate structure at the moment as a result of ESG, but I think at the same time, the majority said if the pressure is there from the financiers to do so, that they will. So I think it's maybe the environmental focus, there's more regulation out there on that at the moment. But if regulation shifts and it becomes more apparent that there's regulation on the governance side, it will become something that people will sit up and listen to. I think it's quite clear that out of the ESG and what's driving change, I think legislation was the top across financiers and owners, that's what's needed to drive the change. I think we see that as being the kind of level playing field. If everyone's not playing to the same rules, then people are not going to change. But I think, I'm sure you came across this when you were doing your issuances, but like things like the EU taxonomy, the EU rules on economic substance, these are all going to pressure, I think, and put additional pressure on governance as these things become more and more in everyday thinking. All the banks that are in Europe, anyone that has a bond issued in Europe, you're going to need to sit up and pay attention and learn about things that maybe you hadn't heard of before.
Interesting. Did you get questions on legislation? Start with Matthew.
We did not. We think of ourselves as a business that does the right thing. So we're always looking at the information that comes out of Europe and all the different geographies. We operate in essentially every geography. So it's a constant ESG committee constantly looking at the various developments and the impacts on the business. So we did not in the bond issuance specifically. But I can imagine it being of growing importance. And on the just to the point on does ESG drive change? I mean, we've incorporated it as a part of our website. We have the report coming out. We have an ESG committee that I sit on. We have a team dedicated on asset integrity to figure out how to always be optimizing our environmental impact. And it has been on the investing side, which my team is responsible for, it has become a part of our underwriting criteria. So our vessels have very long useful lives, so we need to make sure that we're thinking of the future and all the potential changes when making those incremental investments.
Terje, did it come up in your investor meetings?
Not that much focus on it actually, but I think that is also related to how we as a company have been transparent for many years. We have started disclosing our sustainability report 2 years ago, which is kind of describing how we attend to many matters within the sustainability. And also, for example, this year, I think the annual report from Odfjell SE, we have, I think, 25 pages, kind of ESG report included there, and we describe many aspects on both the S and G. And of course, legislation is something that we just have to be sure that we are compliant with, and I think also investors expect that for a company like Odfjell. When it comes to the kind of survey by Watson Farley, I think that is mainly, it's also influenced by, it's still early days for sustainable financing. There is also a big difference between various shipping companies and the sectors. And for example, one small shipping company is with a couple of vessels, kind of where the owner is kind of on the bridge and is taking care of the vessel himself. That is quite different than a large shipping company that has kind of their own sustainability department, sustainability chief officer, and so on. So it's still kind of a big variance between the various shipping companies and how developed they are when it comes to sustainability.
Yeah. Well, we have two very different companies here with us today. So, I guess, Lindsay, the problem is more the absence of legislation, isn't it?
Yeah, no, I think the people will change when they know what they need to change to, when they know what the criteria are that they have to meet. So I think, like the EU taxonomy, for example, at the moment is still in development phase, and people need to understand it. They need to know what's required. I think there was a lot of initial reaction around the EU economic substance rules, how these impact the offshore jurisdictions. All the offshore jurisdictions involved in shipping quickly rallied around that to work out what's needed. I think if that pressure continues, then people are going to look more at onshoring shipping. I mean, we've definitely seen an increase requests for people looking at either Singapore, for example, or looking at the UK and various European tonnage tax regimes. So I think that onshoring of shipping, or those onshoring discussions, we are having those more than we were before. And I think out of the survey, about 30% said that they would look to change flag in the next 1 to 5 years, 30 to 39% flag and onshore jurisdictions. So it is something that's coming into people's mindset, I think.
Wow. Okay. So quickly, Terje and Matthew, is that on your radar at the moment? Start with Terje.
I would say that we have kind of a well-developed kind of structure where we have vessels owned within different tonnage tax regimes. We are within the Norwegian tonnage tax scheme. We are within the Singaporean tax scheme, and we also kind of in Brazil, for example, we are of course reporting according to the local tax systems there. So we have to adapt to the kind of systems where we have our fleet owned from, and we also organized our fleet within kind of the traditional flags, being Norwegian flag and also from Singapore. So we are kind of, I think we have the structure that you should expect from a shipping company like us. Mm. So again, that's not been an issue when we have been discussing with investors, whether we are kind of how we take care of legislation in the various parts we are operating and where we are located.
Mm.
Yeah, so similar to us, again, because of our business model, the customers drive a lot of the flagging decisions. But for the vessels where we elect, we are a Hong Kong flag primarily.
So that I think that's a key signal, isn't it? The size of your businesses, the sort of professionalization of your businesses. You're already onshore, so to speak, in a number, and using the benefit of tonnage tax. And I suppose, as you mentioned earlier, some of the smaller companies that don't have the same resources, this is maybe something that's at the start of their journey rather than already embedded into their sort of structures.
Very interesting. Another one of your findings in your survey, Lindsay, that maybe seem to be in conflict with the finding that financiers are placing slightly more emphasis on ESG than operators, was that banks in particular aren't really set up to fund research and innovation. Does that leave a greater role for the bond market, do you think?
I think it's the traditional ship finance banks are not set up to necessarily fund new innovation or technology. That's not the risk they take. They take asset risk, they finance proven technology and within an asset. I think the research and development, the development of new products, I think that does fit well within the sustainability linked bond market, because you're not looking at necessarily using the funds for one particular, purpose. You can use it for your general corporate purposes, and it's about changing the way in which you run your business and improving the way in which you run your business. So I think there's definitely a huge role for sustainability linked bonds to provide the capital that you need to fund the transition. I think there's quite a demand from the survey that this new innovation technology has some sort of government support or government funding. That was definitely a theme from the survey. But equally, I think 63% said that they're likely to use own funds or existing funds to fund this, or 62% of ship owners said they might be looking to form JVs. And it's not necessarily that the two companies will come together and become one, but that they will form corporations or joint ventures to fund this project. And I think everyone agrees that for shipping to transition is not a job that any one company can do on their own. So I think that was a clear finding, but also an interesting finding, where traditionally people haven't necessarily been keen to team up with others.
Yeah. Terje, sorry, Matthew, you've your company Seaspan, you've got both a sustainability linked bond and a sustainability linked loan, haven't you?
That's right.
And are the targets different?
The targets are different. The financings are also different. One is a secured, so there's specific assets in that pool, and that's based on an AER similar to Odfjell. And the unsecured is based on that metric I described earlier, which is capital investments in alternative fuels.
Right. Terje, have you used your sustainability framework to look at other forms of financing?
Actually, we have. We finalized the framework only January this year, but already last year, when we are about to refinance a couple of vessels, we decided with the bank that we should have the opportunity to include the framework for this bond also for this loan for the vessel financing. So actually, only a few weeks ago, we implemented the same framework for this ship financing, and it's exactly the same framework, exactly the same KPI, and we're also in discussion with a few other banks now for some other vessel refinancing, and are going to use exactly the same framework. The only way that it differs is how it's influencing the price on the financing, because the bond loan is structured in a way that you get a penalty if you're not able to deliver according to the plan or according to the KPI. Then you get the penalty at redemption. In our case, we have to pay 150 basis points in a penalty at maturity if you're not succeeding at delivering according to the plan for the bond. When it comes to the bank finance, that is a bit different, because the banks are kind of offering you a discount. If you are delivering according to the plan as you go, you will get a kind of a lower margin on your loan as long as you deliver according to the plan. So they're giving an incentive, and it's a bit different because the bond investors are kind of different incentive than you when it comes to financially, because they get additional coupon payment if you are not delivering according to your plan. So I think it's better the way it's structured with the banks, that they actually give you incentive to deliver instead of a penalty. But it's two different animals. The bond market is it's more difficult for those investors to actually see a step down on the margin if you deliver, because I think that's difficult for them to kind of look into and price in the market.
Mm-hmm. But it's kind of counterintuitive, right? Because they actually want to see that step down.
Yeah.
Everyone's working towards the same goals here, aren't they?
Yeah.
Or are they, Lindsay? Is there potential for conflicts between a bank and a bond investor?
No, I think if you've got proper advice and you've structured it, and you can have separate regimes that work alongside each other. I think that there's many ways to achieve this, and I think it's just important. It's like having different covenants in your loan and your bond documentation. You don't want them to conflict because you can't be stuck in the middle. So they just need to work. As long as the two can work in harmony, it's absolutely fine.
But it's an interesting topic though, because right now the penalties and improvements are small. I imagine that they'll grow over time, especially as some of the ESG KPIs are refined and can be measured more accurately. So that leads to the question: what will happen? Will the smaller shipping companies lose access to capital because they just can't afford to spread the cost of the ESG advancement over a smaller fleet? That's something that we're definitely thinking about, what this means for the future as it evolves and the impact to access to capital.
I think that's probably right, isn't it? It's the access to capital rather than necessarily just the pricing, because I'm sure if you had a banker on this panel, they'd tell you that there's not much more room for the margins to decrease much further, So I think what we're seeing, it's all about access to that capital and who can have it. But at the same time, when there are large chunks of the industry where you can go and get your financing done without any ESG criteria whatsoever, maybe that change won't be as quick as we all think it should be.
But right at the beginning, you mentioned there was a question mark over whether shipping companies can continue to access financing that's not linked to sustainability in the future.
Or that if they're not meeting ESG criteria, who will be the ones that are willing to put the capital on the table? I think it's so not that it has to be linked to ESG, but if you don't meet minimum criteria, will you have the same access that you do today? We're already seeing, there was a big question mark when China were not signing up to the same sort of trajectories, but now we are seeing even within the Chinese sale and leaseback market, Poseidon Principles, for example, being incorporated. So that there is more of a recognition that they need funding from banks that have maybe signed up to Poseidon Principles, etc. So we're seeing it becoming more normal across the board. So is that going to close a funding gap?
Was that a motivation for Seaspan and Odfjell to be early movers on this front?
I can
Terje, you want to go first?
From Odfjell, kind of the sustainability linked bond that we issued, that didn't kind of drive our sustainability initiatives in any way. We had a kind of already ongoing discussions and how kind of we should develop as a company, what kind of sustainability targets should we have as a company for the future. Because we saw the new IMO regulations coming, we were expecting that there will be stricter requirements towards 2030. So we kind of were planning how to kind of meet that as a company, make sure that we are sustainable, that we are kind of ahead of the front to be able to meet the new expected requirements. And during that phase, we kind of decided we wanted to have very ambitious targets. So we set the 50% reduction target in 2030, and also have a clear ambition to only from 2030 not to invest in the kind of only invest in climate neutral fleets. So we have set some targets as a company because we think to being sustainable, that is the way we as a company can survive in the future. So that is good business to have a sustainable business. And then we kind of added on the sustainability linked framework on the financing, because we had these targets that we could also use in such a framework. So it's important to kind of state that that wasn't the fact that we did the sustainability linked bond wasn't kind of the way that wasn't setting the target. We set the target first because we want as a company to deliver on these targets, and then we saw that we could use those targets also for the sustainability linked financing. When it comes to the kind of whether you get access to capital in the future, or if you are not kind of leading or have ambitious targets, I think there will always be access to capital. But of course, it's a question: what is the cost of the capital to get competitive financing cost at a low financing cost, you need to be in the forefront. And for those companies, smaller companies or kind of companies that are not taking sustainability very seriously, I think they will have to pay more for the financing in the future.
Yeah, I agree. On our front, since we did the framework, sustainability linked framework in the bank market first, and because of the size of Seaspan and the number of banking relationships, we really wanted to take what the business was already doing over the last decade and be proactive with the banks. And as Lindsay said, some of our lenders had, no focus on ESG. Some of them had a very heavy focus. So we wanted to really work and control the future and the narrative. So we got out in front of it and worked in the bank market first. And then it was very easy for us to apply that similar link in the bond market. And now, similar to Odfjell, we will likely be utilizing this similar frameworks for a number of our future financings.
Very good. Okay, well, we've got some questions in the Q&A. The first one is a bit of a technical question, given that we've got two finance guys and a lawyer on our panel. So I'm not sure whether which one of you or any of you want to tackle this. But the question comes from Edwin Pang, who's chair of the IMO committee of the Royal Institution of Naval Architects and one of the coordinators of the IMO CG on carbon intensity guidelines. He says, in our work looking at the indicators, we find that AER is a somewhat blunt and flawed instrument, so the efficiency ratios. And in some circumstances, reduced CO2 emissions can be coupled with increased AER. Additionally, the influence of cargo consumption, e.g. cargo, heating or reefer containers, can be quite large for certain trades. How do these sustainability-linked bonds take account of these issues apart from applying fleet averaging, which is currently not how the IMO will regulate ships? I mean, I guess the first question is whether the efficiency ratios play a part in any of the targets that you've got in your bonds. Terje, remind me, are they included in your targets?
Absolutely. It's kind of the reduction ambition to reduce 50% carbon emission that is related to AER. It could be also tagged to other indicators, EOI, for example, but we have kind of considered that back and forth and discussed that what we actually can influence as a company is the emission from our own fleet, to make sure that the fleet that we operate and control are the most kind of environmentally fleet that we can have as a company. So we think that is where set the target that we can influence by making sure that we do the right investments in our vessels, that we do the right thing when we operate and manage the vessels, to make sure that we reduce the carbon print for our own operations. That has been the driving motivation behind using AER as an indicator.
Right. Yeah, and we have it in the bank side. Okay. While it's not a perfect metric, right? The best way at the moment to get close to perfect is a combination of different metrics, but at the same time, we're very focused on making sure these are scalable reporting and we can apply it to many loans. So it's not perfect, like I said earlier, but it's a metric and we are measuring it. And to Terje's point, it's certain aspects of it are within our control in our business model.
What was it I heard you say once? Something like, never let perfection get in the way of
good.
Yeah. That was you, right? You said that.
That was not me first. I quoted someone saying that, yes. Okay. On a panel.
Yeah. All right, so we have another question here, also a technical question, but a different sort of technical you'll be relieved to hear. It's to do with the process of reporting. It's anonymous. The questioner didn't state their name and affiliation like I asked. But the question is, how are Odfjell and Seaspan reporting on the KPIs to the investors under a sustainability-linked bond? Do the ship owners report themselves, or are they dependent on second opinion providers? You began to touch on this earlier, Terje. Yeah. You guys are using DNV, right?
Yes, the framework that we established, that was done in cooperation with DNV. So they have kind of signed off the framework and also the ambitions, saying they are ambitious, they are measurable, and we are going to kind of report once a year going forward. And that also have to be verified by DNV or something or someone like them, kind of verifying the figures that we are reporting, and also verifying that the ambitions we have towards 2030 is still achievable according to the measures that we are implementing.
Matthew?
And for us, so part of the documentation that's issued with the bond is a template for the annual reporting. So we will report it. We've worked with Sustainalytics to develop our framework and KPIs and make sure that they are appropriate and ambitious enough. But they will verify our reporting.
Right. I think that answers that question. We've got another one from Edwin Pang, the chair of the IMO committee of the Royal Institute of Naval Architects. He says, I believe both the EU taxonomy, although not finalised, and the CBI are excluding funding of ships dedicated to the transportation of fossil fuels. How would that affect access to finance? I mean, well, container ships don't really carry fossil fuels. I guess, Terje, your ships carry fossil fuel derivatives. Is it something you've considered?
It's a really good question, and I think actually very few shipping sectors are qualifying today the requirements within the taxonomy. So we think that has to be developed in some way to cater for shipping companies within the various sectors, because today it is too strict, and it has to be kind of fitted for kind of regular shipping business, because transporting goods by vessels, that is the most environmental friendly way you can transport it across the world. So we think that has to be kind of changed in a way that also the traditional shipping sectors will pass that, because today I think very few shipping companies actually will fit within the taxonomy as it's structured today.
I think, Vivek, it just ignores that the whole point of what we need to be doing now is transitioning. So if you don't have this funding to support transition, what's the point? You know, I think that there's engagement from the Global Maritime Forum and various institutes of local shipping institutions that to engage with the EU taxonomy and to make them understand that it's crucial, that we can't get to zero without transition. You can't just stop it, and it ignores how important, as you just said, shipping is to international trade. And I think with the Scope 3 emissions rules that are coming in that will apply to all sort of industries, they need to be looking at their whole supply chain. And if you can't improve how the supply chain is doing with its carbon emissions, how can they then report and improve as well? So I think it ignores the fact that we need to fund the transition.
Yeah. I think there's a kind of general frustration with policy-making bodies in this area. That maybe, well, there's a whole other SPNL event to be had on that subject, and maybe our friend Edwin Pang can help us with that at a later date. But yeah, just to finish, I want to ask whether we can have a live exclusive here for attendees of SPNL. One of Lindsay's findings in her report was that one of the ways that ship owners are most keen to fund research and innovation is through joint ventures. So we have two shipping companies here, Seaspan and Odfjell. Both of you have sustainability-linked bonds. You've both got something in common already. How about it? An Odfjell Seaspan joint venture? What do you think?
We're always open to working with like-minded people to figure out creative solutions. I think we just joined the Merce McKinney Moeller for Zero Carbon, Center for Zero Carbon this week. So we're doing a lot on the maybe less formal partnership side to try to figure out group approaches to this large problem.
Terje?
I think we have very much the same approach here. Odfjell has not traditionally been investing heavily in new technology, but we are working close with important vendors for us and for the industry, both to make sure that we are close to the developments of the new technology and also make sure that we use our expertise when that is being developed. And it's important to note that a lot of technology needed to make sure that we have a greener shipping business in the future is there already, but it's not at the scale you need it to actually take it, to use it in the daily operations. So we have to work close towards our vendors and also between the shipping companies to make this happen, I'm sure. But not necessarily with us going in with a lot of funds. We are an operator and an owner, and we need to be working together with the rest of the shipping community to make this happen. Also including, of course, the banks that also will have to support green or sustainable financing in the future. And I think the drive will continue with the banks and the investor market pushing this. If they are not doing that, that will take more time before that actually is going to happen.
Well, I've got all Matthew's contact details. If you want me to pass them over to you.
It's not a market announcement, you're not going public.
Well, anyway, I smell that there's an agreement that needs drafting somewhere in there, Lindsay.
There we go.
Okay, and thanks everyone for being open and frank with us today and sharing your experiences and your thoughts on this important new development. And we hope very much that this will be transformational for our industry and will lead to good things. So with that, I'll hand back to Isabel.
Thank you so much to Vivek and to our panelists. We don't really have a big round of applause, but we are where we are. So thank you very much. For those who attended today and wanted to share this with your colleagues or friends, we'll have a YouTube link up on our website. And for those who'd like to download and read the full Watson-Farley report that Lindsay referred to, entitled The Sustainability Imperative, there's going to be a link on the event page of the SPNL website as well. And our next scheduled event for the SPNL is on the 29th of April, but keep an eye on our website because we might have something in the interim. So thank you so much to everybody for coming today, and leave it there. Thank you very much.
Thank you.
Thanks, guys.
Everyone.
Thank you.
Bye.